What's happening is State Farm has filed for an emergency rate increase. What they basically went into this hearing saying was, hey, look, we need money. We need it right now. All of the independent financial rating companies such as AM Best and S&P are dropping State Farm's financial rating. They're concerned, rightfully so, that at any point, some of the lenders, banks that are out there, might start calling loans on people that have insurance with State Farm because their financial balance sheet is in such bad shape. They are asking for a 17% rate increase, which in turn, they would also bring in an additional $400 million from their outside of California company. Now, they also claim that in the event that it turns out that they don't need this extra money, they will refund the premium back to the policyholders with interest. Okay, next, the Department of Insurance is also there at the hearing. They are supporting the 17% rate increase. They look at this as being an urgent matter that needs to be handled right away. And on top of it, they're very comfortable with the idea of it being sort of a no-lose situation, because if it turns out the rate's not justified later, State Farm's guaranteeing to give refunds plus interest. Finally, we have Consumer Watchdog, who stood there and basically said a few things. They said, well, number one, we do not believe that you should be granted this rate increase. They claim that the financial hardship of an insurance company should not be something that's looked at when there's a justification for a rate increase. They're saying that specific legal procedures have not been followed, therefore, State Farm should not be given this additional rate. Finally, they said that an interim rate change like this would be a bad precedent to set. So the takeaway from this is that we have the Department of Insurance there getting information from State Farm and getting opinion from Consumer Watchdog. Now, the Department of Insurance is very consumer friendly. They're all about the consumers. Remember, it's an elected position, so there's politics involved here. The insurance commissioner wants to be sure that if they're going to sign off on rate increases for State Farm, that it really has to happen, because as you can imagine, not a very popular thing to do. On the other hand, Consumer Watchdog, their main goal, as according to their actuaries, according to the people they actually brought to the hearing, they believe that State Farm actually needs to lower the current rate that they have right now. This is what you should expect. The secret sauce about this entire hearing is it doesn't matter. It's truly theater. I'll explain why. The Department of Insurance and the insurance commissioner is the only person and organization that can make the actual decision whether these rates are granted or not. So why are we going through all of this? Well, all of this money is being spent. These 3 days of hearings are going on. And at the end of the day, even if this judge makes his recommendation, because that's all he can do, and his recommendation says, I don't think this is a good idea, doesn't matter, because the insurance commissioner has the final say anyway. Since the Department of Insurance was there for 3 days, and basically we're saying to everybody that they support this with all of the consumer protections that are included, I would be surprised if that's not inevitably what happens. So we would expect to have some type of opinion from this judge. I would suspect in the next week. I believe the Department of Insurance at that point will probably review the findings from the hearing for about another week, and then we'll get the final outcome from the insurance commissioner and the California Department of Insurance. That's a great question. A lot of people say that, well, if we let one insurance company do this, others will follow suit. Keep in mind, this is a special track that State Farm is following. They have to basically be on their hands and knees and show proof of no funds. They have to be on the verge of bankruptcy, the verge of insolvency. So for anyone to suggest that other insurance companies would actually bankrupt themselves just to try and get an extra few percent in rate increases, I mean, it's just not realistic. The financial harm that State Farm is going through on the long term by their simply the fact of being in this position, it's going to take a very long time for consumers to get to a place where they feel comfortable buying insurance from this company that stood in front of this panel, stood in front of this hearing, filed with the Department of Insurance and said, we need money. Not exactly the type of feeling you want to get from an insurance company that you want to be sure is there if you have a claim.